Hi there, welcome to Neppy Invest. So in this video of my series of Appendix 4Cs that I'm looking at, that they've been released every trading day so far. But the company I'm looking at here is a company called MSL Solutions. I've been following this company for a few years now. I think they listed in October 2017 or around mid 2017 anyway. This is a SaaS company, so just because they're a SaaS company, I am interested in them. And they deal with sports, leisure, and hospitality, that sort of sector. And what they do is they connect a business's point of sale software to the rest of the business's operational software. And some of their clients are quite impressive client list. They do have over 1,000 customers. And some of their customers include the PGA, Golf Australia, Liverpool Football Club, and Manchester City Football Club too, and not to mention Parramatta Eels. But we will just getting to see how they're doing. They haven't been doing too well over the past few years, and you'll see the chart, you'll see the cash receipts. There is, I think, something amiss with what I'm looking at, but we'll get into this Appendix 4C. So receipts from customers, $6.7 million. So that seems like that's impressive. If you take that out to a year, that's towards $26, $27 million in a year. So that's pretty good. And then right at the bottom there, the net cash from operating activities are over $1 million. But you just can't look at those two things. You just have to see some other numbers there. And the money they get from government grants and tax incentives and income tax received, so they didn't pay any income tax, they actually received some, totaled 1.021 million. So, or 1.011 million. So if you take those away from the operating activities, they are only cash flow positive to the tune of $15,000. So they had to receive money from JobKeeper and another cash flow boost of $75,000. And they also received some assistance from the UK government, if you look at the bottom there. So all in all, a little bit of positive news there that they are at least cash flow positive to the tune of $15,000. I'm not going to include the income tax received and the government grants, because usually that's just a one-off and you can't really rely on that. So probably they are chewing out some of the costs. They were, burning a lot of cash because of costs, and I like to see management pare back the costs if it's not really needed. And it looks like that's what they might have done, because when you look at the history of the cash receipts, you can see something I don't like to see. It's instead of an uptrend, so a lot of the companies I'm looking at in Appendix 4C, you can see a definite uptrend with the cash receipts. This is a little bit opposite. It's a bit of a downtrend. They're really focusing on the growth between the last quarter and this quarter. So last quarter was actually a low of $5.2 million in cash, and then they've risen to 6.7. So they're really focusing on that. They're trying to, show the world that they're growing. But one of the main reasons I like to do this is you can just see the trend. So you can't say the trend has changed just based off the difference between the July 20 and October 20 cash flow or receipts. I'd like to see that continue for a few more quarters. I'd like to also figure out why they're having trouble increasing their cash receipts. Are they losing business, losing customers? What's their customer retention rate? That sort of thing. They didn't really provide that in any information I saw, which is disappointing. So they did, as I mentioned, they really sort of focused on that this is their best quarterly cash flow performance. And there was the first positive cash flow since listing. They really focused on that, and you just got to take that with a grain of salt, especially that second line there, 27.7 growth quarter on quarter. So they're just looking at quarter on quarter growth there. Of course, if you look back a year ago and that was a bad quarter and they improved from that, they would have looked at year on year growth. So management tries to do that when they release reports. They try to focus on the positives and try to steer away from the negatives, and they've definitely done that with this quarterly cash flow. Cash of $4.8 million, and so with a market cap of 26, still probably a little bit lofty price than I would want. And one of the reasons I'm not the keenest on this company is they didn't provide any metrics I like to see for SaaS companies. Customer retention rate, I've already mentioned, and annual recurring revenue, they didn't even mention that. So I'd like to see those numbers, see how they're doing. That's how I judge a SaaS company. The fact that they're positive cash flow, very small amount though, it's a reason why I've now put this company onto my watch list just to see how they do in the next few quarters. Market doesn't like this company at all. I can see the trend has been down for ever since listing. You can just see very profound, really noticeable downtrend here. But in saying that, it has broken. So the downtrend has broken. So that's the downtrend I've just noted with that orange line. So a straight orange line where I just see where the tops are, or the peaks and the share prices are, and just try to draw the line that touches those peaks, which I've touched on 3 occasions here. So a definite downtrend there. And once the price starts to go or move through that downtrend, you could say the downtrend has been broken. So you can definitely say the downtrend has been broken in July this year. And there was a bit of action, share price action, just after it broke that downtrend. Share price has now moved, say it's consolidating around about 6 to 7 cents. And it has peaked in the last few days just because of the release of this 4C. So it's gone from about 6.5 cents all the way up to 8.2 cents. And on the top right there, you can just see the interest in the market. On the release of their 4C, which was done on the 15th of October, share price did increase by 16.67 on highest volume. So 1.3 million shares were traded, which is fairly high when you look at the volume down the bottom there. It's a peak in volume anyway. So I just pointed out where the long-term downtrend was broken and share price has started to form a base. If you take away that announcement or that really increased volume day on the start of August, I'm not sure what that was, but a lot of selling into that. You can see the peak in price was, see that very long tail? That means a lot of selling happened when it got to the share price of 12 to 13 cents. And because there's a lot of selling, the share price really backed off, and that selling continued in the next few trading days after that announcement. If it was an announcement, I think it would have been. Probably would have been an announcement based off maybe a new customer or something. Anyway, so that's the 1 year daily chart. That's all I've got on MSL Solutions. That's not the greatest company. The main thing I don't like about this company is the lack of an uptrend in the cash receipts. They are cash flow positive and they have broken a long-term downtrend. So that's a few positives there. So I've just put them on my watch list. I don't own this company. More than likely won't own them for a while if I do ever own them, unless they start to change those cash receipts trends. And if that happens, we might see an increase in the share price. They are in interesting space, and that's the main thing I'm following them for. So that's all I've got today. If you want to leave any comments, just leave it in the comments section. And again, I'm not a professional advisor, so don't take my advice. If you do need professional advice, make sure you seek out a professional. So that's all I've got. Have a good day, and I'll talk to you again in my next video. See ya.